Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, after Chainlink has pumped 150% over the past few months and has now had a 10% pullback, people right now are starting to call for a brand new bear market. I'm just going to spend 1 to 2 minutes really quickly explaining why content creators are constantly calling for a bear market. So permabulls like myself will never get credit when price goes up. However, the people who are constantly calling for a bear market will get instant credibility when a bear market actually starts, even if that person has been wrong over 9,000 times during this bull market over the past 3 years. People will claim he's a genius and the next coming of Warren Buffett and Michael Burry. Not sure why people are like this. It's just human conditioning. Just take a look at social media and mainstream media. Mostly everything and everyone is always negative. For example, look at Peter Schiff, the man who has been wrong about crypto for over a decade. 90% of his published books have the word crash in the title. People love and are obsessed with negativity and misery simply loves company. Anyway, today we'll start things off with Chainlink adding over 44,000 Link tokens, about $1 million worth, to its reserve, bringing its total holdings to around 109,662 Chainlink, which is worth roughly $2.4 million. With a dollar cost average near $19.65 per Chainlink, the accumulation looks bullish and not bearish. The funding comes from both enterprise deals and on-chain service fees, reinforcing the Chainlink Reserve's role as a buffer for future ecosystem growth and incentives. This strategic accumulation pattern, paired with stronger institutional adoption, suggests that Chainlink may be quietly bulking up for a bigger buyback program in the future. So next up, more stablecoin adoption. Citigroup is stepping deeper into cryptocurrency, exploring custody services for high-quality assets, backing stablecoins like U.S. Treasuries and cash, as well as for digital assets behind Bitcoin and Ethereum ETFs. The bank is also developing stablecoin-based payment solutions that would let clients instantly move or convert stablecoins between global accounts, building on its tokenized USD transfer system. These moves come after new US legislation cleared the way for banks to offer such services, and now Citigroup is even considering launching its own stablecoin. This is further evidence of the stablecoin supercycle I've been talking about for a while now. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors, like orange and red, represent times of high risk, which are the best times to sell Chainlink. With Chainlink pumping to almost $25 this week, Chainlink's risk level did rise to roughly 0.07. That being said, Chainlink's recent 10% drop over the past few days has dropped Chainlink's risk level to 0.05, which is still relatively low, which means that buying Chainlink today is still considered low risk, not financial advice. Weekly friendly reminder, remember we want to be buying Chainlink during these pink and blue risk levels and selling Chainlink during the yellow, orange, and red risk levels. Now, based off of historical data, we can see that every time Chainlink has printed a pink risk level at the green bottom regression line, Chainlink over the next few months has gone parabolic to the upside and tagged the upper red peak regression line. Chainlink in June of this year printed a pink risk level at the green bottom regression line, Furthermore, there have only been two other times in Chainlink's history besides the low set in June where the price of Chainlink traded at or below the green bottom regression line and printed a pink risk level. The first time being in December of 2018 when the price of Chainlink was trading at 20 cents, and the second time being in June of 2022, back when the price of Chainlink was trading at around $5.94. We can also see that each time that Chainlink traded below the green bottom regression line and printed a pink risk level, like I said before, Chainlink basically got a free ride to the top red peak regression line. So if Chainlink tops out in Q4 of this year, aka in November or December, like most cryptocurrencies should, we could be potentially looking at a $300 Chainlink. In other words, the longer we delay the pump, the higher we go. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. So moving over to TradingView and into the Wyckoff analysis. So Chainlink is breaking out of a multi-year Wyckoff accumulation phase, and I am expecting Chainlink to challenge new all-time highs for this current bull market cycle. As you can see on screen, the second LPS, which stands for last point of supply, bottomed in August of 2024 inside the blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci levels. A last point of supply occurs when market makers absorb whatever supply is left on the market before the eventual breakout to the upside. Also, the third LPS also appears to have bottomed inside our blue Fibonacci retracement support area, once again between the 0.618 and 0.786 Fibonacci levels. So going over bull market price targets really quickly, the first bull market price target for Chainlink is at the white 1.618 Fibonacci retracement at around $60. The next potential price targets are the 1.236 to 1.382 Fibonacci retracements, which span between $92 and $131. If Chainlink blasts past those levels, the next potential price targets are the 1.618 and 1.786 Fibonacci retracement levels located between $230 and $342. And once again, if we get super lucky, then perhaps Chainlink has a chance at reaching the 2.272 to 2.414 Fibonacci retracement levels this market cycle, which roughly span anywhere between $1,000 and $1,500 per Chainlink. Now, for me, despite the sharp 10% pullback over the past few days, for me, the worst case scenario for Chainlink is simply a retest of the white Wyckoff demand trend line at around roughly $17 to $18. Okay, so let's zoom in for more short-term analysis. Right, so Chainlink is currently printing a weekly candle with a topping tail, which is not really bullish for price action over the next few weeks. Whenever you see an uptrend with a topping tail, that means that buyers pushed the price higher in the beginning of the week when we saw Chainlink pump to almost $25 per coin, but sellers were able to erase all the week's gains and push price down to end the week. So I'll just be upfront and honest. We talked about the importance of the white trend-based fib extensions between $19.46 and $20.98 over the past few weeks. This region has been a major resistance area for Chainlink, and this week we finally pushed above it. That being said, if we do see downside over the next few weeks, it's very important for Chainlink not to crash, but to hold the white trend-based fib extensions as support. If we can flip these levels from resistance into support, that will give buyers further confidence to push price higher to the next white trend-based fib extensions located between $27.80 and $30.63. Once again, the area of interest over the next few weeks is to hold the area between $19.46 and $20.98 as support. Now, in the immediate short term, Chainlink has formed a 5-wave move to the downside from the $25 top this week and is currently oversold. So I am expecting a short-term corrective pump to occur over the next few days. So let's actually move over to the Elliott Wave count really quickly. So the primary wave count has changed a bit this week for the first time in a very long time due to the weekly topping tail and the fact that I am expecting some more downside over the next few weeks. I am adding another potential 1-2 setup in white to give Chainlink some breathing room to correct to the downside. Because if you notice, the bullish move off the June low for this year actually occurred in 5 waves. So long as the current move to the downside is corrective and hopefully is a 3-way pullback, preferably holding above $19, we can expect the next Chainlink pump to challenge new all-time highs because the series of Wave 3 extensions in both white and green should definitely take Chainlink to the all-time highs and hopefully go significantly much higher than that. And obviously Wave 3s in Elliott Wave theory are typically the strongest waves in an impulse. Like I said in previous videos, the longer we delay the pump, the higher we go, right? Going back to the risk and regression analysis, if we take a look at the regression lines again, you can clearly see the red peak regression line goes significantly higher the longer we wait. If Chainlink tops out in September, we are potentially looking at a $150 Chainlink. If Chainlink tops out in November, we are potentially looking at around a $300 Chainlink. So once again, the longer we delay the pump, the higher we go. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.